Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Hedera and Hbar. So hopefully this video is not as long as I think it will be, but hopefully it's short. But we have a lot to go over, right? Because the world of finance is changing drastically, and I even put out a tweet over on Twitter, and I said that as soon as we see blockchain interconnected within the financial system, that the whole world of finance changes forever. And I do think that it's happening. I think that it's happening slowly but surely, and I think that a few of these players like Hedera are already at the forefront of this major disruption. And I'm very excited to see this as well, and I think that everyone that is an Hbar holder should be excited to witness this happening in real time. So without all of the talk and all the jumbo talk, whatever, doesn't matter. Let's actually dive in, right? So we've seen this from Hedera. Archax Exchange has tokenized its interest in Aberdeen, a multi-billion pound market fund, and has a pipeline of several $100 million worth of funds coming in to be held in that tokenized money market fund and where people can receive a yield, all tokenized on Hedera. This is very exciting. Now, this comes at a time from CoinDesk where we see Archax to launch regulated exchange for tokenized assets this year. Listen, I think it's so clear at this point that tokenization is probably going to be one of the biggest trends behind crypto. There was actually a report by Citi, and I've gone over it many times. Now they're talking about 6 to 8 years. I don't think it's going to take 6 to 8 years, but they're saying in 6 to 8 years, we could see mass adoption through many initiatives, and tokenization is one of those major initiatives. And I could actually see tokenization being a major driver behind the space, simply because guess what? We are seeing every traditional giant jumping in on the tokenization trend. And this is not a trend that's going to slowly die out. No, this is a trend that's probably going to be really fast, that's going to continue to grow and hit astronomical amounts of money being tapped in, and also individuals and companies and institutions. Because when you look at the tokenization efficiencies, and you also look at the markets that are ripe for disruption through tokenization, it's so clear on how big this is going to be. But further on within this article, we believe the future is the tokenization of all real world assets, and all traditional financial instruments are moving on chain too. Again, this is why I say tokenization is the real deal. So we are launching a regulated digital market to handle these regulated tokenized assets. Tokenized assets, and they do talk a little bit about this, are digital representations of those assets on a distributed ledger. The market for tokenized assets could reach as much as $10 trillion and $3.5 trillion even in the bear case, digital asset manager 21.co said in a report earlier this month. One example, Euroclear, one of the world's largest security settlement houses, said Tuesday it settled its first digital note, a World Bank issue that raised 100 million euros, roughly $106 million for sustainable development. And Archax, they're talking a little bit about Archax here. The London-based company has also tokenized its interest in Aberdeen Market Fund in euros, pounds, and dollars, and has a pipeline for several $100 million worth of funds coming in to be held in that tokenized money market fund, and where people can receive a yield based on the money market fund. Now, remember what I've talked to you guys a little bit about this endeavor regarding money market funds. It's a big deal, simply because money market funds right now in the US are predominantly dominated by trillions of dollars. The last time that we looked at it, it's roughly $6 trillion locked away in money market funds. It's a huge driver of not only value, but also growth. And this could very well mean a lot for Hedera, considering the fact that this is built upon Hedera technology. Outside of this, Archax is a must-watch company. Why? Because of the players tied to it. Let's actually look into this. So over on Archax website, we see Archax, the first FCA regulated global digital securities exchange. First and foremost, securities transactions, they are massive. We've talked about this with the DTCC. It's not trillions, it's quadrillions. They are the first company that is launching this digital securities exchange that is targeted at institutions. They're also tapped in with the FCA brokerage, custody, and crypto asset permissions. Founded by experts from traditional capital markets and backed by an accomplished advisory board, Archax offers a credible bridge between the blockchain world and the existing investment space. The Archax team is used to working in highly regulated markets and has a deep understanding of the blockchain landscape and tokenization too, as well as a vision of how to evolve them and open up digital assets to institutions in a transparent manner. Their solutions are built using existing, proven, resilient, scalable, high-performance infrastructure hosted in top-tier data center space and integrated into the existing institutional trading workflow. As well as listing global digital issuances, Archax is also developing its own range of liquid digital structured products that will trade on its exchange. Again, the reason why I bring this up is because, listen, these are traditional players that were working in highly regulated markets. What do you think is going to happen to this space over the course of the next couple years? It's going to become regulated. We are going to see this space mature in a great way and be taken a lot more seriously. I'm very excited for that because that's where players like Hedera become key players. And also, when we look at what they are planning on within Q4, we actually see that they are launching a regulated MTF and then also expanding crypto exchange offerings. This is very exciting. Also, like I said, pay attention to the team behind Archax, but also pay attention to the advisory board. This is where things get very interesting. We have the chairman of the Royal Bank of Canada tapped in. Also, the former chief strategy officer of the London Stock Exchange Group. There's a few other players here as well. HSBC, Custom House. It is very, very interesting to see a lot of these players tied into Archax. And also, guess what? We already know that Hedera's tapped in here. This is very, very exciting. And also, when you look at the tokenizers and issuance, check out some of the players here. Hedera is tapped in with this, but we've gone over some of these players like Securency, or even, for example, Securitize. Securency, well, guess what? The DTCC just actually acquired Securency, which we've gone over. This is very exciting. Listen, there's a lot of key players here, but this is why I say like you need to go beyond just the original announcement, because we know how big Aberdeen is. We've gone over them multiple times, but Archax is another breed. Like they are a big player as well. And all of these three, Hedera, Archax, and Aberdeen working together, this is a recipe for incredible adoption and growth. And again, it only shows you how serious Hedera really is about being a major Web3 giant. They're going to be around for the next 100 years. And they are also going to be the home for a massive amount of tokenized assets and also major players within the traditional financial world. Also, as we look at tokenization, Chainlink recently put out a report. This report is titled, let me go down. It's zoomed in quite a bit. Let me zoom out a little bit. But you see why on-chain finance is inevitable, an industry brief on the next generation of capital markets infrastructure. Now, we know Chainlink is actually working with Hedera. They are a GC member, but we do see here tokenized assets. I've talked about this, right? I've talked about this World Economic Forum report. $867 trillion, the size of traditional markets poised for disruption by tokenization. Imagine just 1% of that being tokenized. Imagine that, 1%. That is absolutely massive, all right? Beyond that, we also see from BNY Mellon, 97% of institutional investors agree that tokenization will revolutionize asset management. Citi, an 80x expected growth rate of tokenization in private markets by 2030. We see here from BlackRock, the tokenization of asset classes offers the prospect of driving efficiencies in capital markets, shortening value chains, and improving costs and access for investors. Remember what I've said, right? When we look at players like Hedera that are at the forefront of this, they are going to reap the rewards greatly. This is yet again another reason why HBAR cannot be avoided in this space. You need to be looking into what Hedera is doing. We also see why tokenization, integrity, utility, liquidity, and transparency. Here's the tokenization of illiquid assets to be 10% of global GDP by 2030. Talking about roughly over $10 trillion plus. This is very, very exciting. And remember, like we've already talked a little bit about it. I think it was like 16.6 trillion by 2030 by the BCG group. I think that they're actually quoting this. But this is huge, right? Like this is 10% of the global GDP by 2030 to be tokenized. A 16x growth from today's levels. A 70x growth from today's levels if tokenization reaches the more aggressive estimate of 42% of the global GDP by 2030. That's huge. We can actually see where the growth is coming from as well. And then down here, smart contracts, smarter markets, automate financial market workflows, 24/7, 365 payment windows to move cash and securities. 83% of senior decision makers are looking to accelerate turnaround times for processes by adopting digital assets. And T+0, security settlement time achievable with blockchain technology. We're talking about instant settlement here. This is from the DTCC, settling $2.4 quadrillion worth of securities per year. We actually see here the holy grail, this is from Accenture, would be to achieve full automation throughout the stack with tokenization using blockchain technology. Then down here, we see streamlined industry processes, the operational process to organizational outcome. Down here, we have seamless interoperability for global liquidity as well, cross-chain communication powering a broader financial ecosystem. 12 plus global financial institutions are experimenting with using SWIFT and CCIP to seamlessly interoperate with any blockchain network. 72% of global institutional investors indicated a preference for working with an integrated provider for all digital asset needs. 100 plus the number of blockchains that have been built with varying technical attributes to support specific uses, and 77% of institutional investors want access to staking pools for enhanced yield on crypto assets. Here's from Citi. The industry needs standards and interoperability. Different financial market infrastructures and consortiums are working on the same problem in parallel, but with no clear interoperability or standardization. This leads to silos in initiatives today. As DLT adoption gains critical mass, there will be more drive to standardization and interoperability. This is why you need to pay attention to crypto. Like right now, I get it, right? We can't stop looking at the price. The price. Daily charts do not matter. When we look at crypto from a zoomed out viewpoint, man, this world is going to change rapidly. Like institutions are getting ready. They're gearing up to tap in. And this quote here, right, the holy grail would be to achieve full automation throughout the stack with tokenization using blockchain technology. This is a quote from 2021. I just talked about blockchain and AI converging in a Casper video, right? Well, guess what? We actually see a quote from Hedera. As AI continues on its path towards becoming a central pillar of the digital economy, DLT is emerging as the indispensable trust layer, providing transformative solutions to critical challenges related to data integrity. The convergence of blockchain and AI is inevitable. Combining blockchain's data integrity applications with AI's analytic capabilities enhances the transparency, security, and accountability of AI systems. Again, when you combine blockchain and AI, this changes the whole game. We're not talking about just finance here. We're talking about every single aspect of life. This is truly a massive opportunity. It's a huge deal. I keep saying, right? Like, as we look at the world of finance, it's obviously changing. But so is the business layer, the enterprise layer, right? Everything we're talking about from finance to healthcare, from healthcare to gaming, anything that we know of today is going to be touched by this technology. And when you combine it with AI, I mean, we're talking about a fully automated digital future. The game is changing, and Hedera is a part of it. They are a big player. And this is why I say, like, everything, we're talking about everything around us will never be the same again. Once blockchain is interconnected within the traditional system, it's game over. It truly is game over. This is also why I say, like, Hedera, like, let it be known. I know that Hedera was a lagger in 2021's bull run. Well, guess what? They are most likely going to be a big player in this next cycle because, you know, they were in the shadows in 2021, but now I think that they're in the spotlight. And I really do think that Hedera is truly changing the game. They are really, at this point in time, they are a real game changer. So with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, to notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, this has been Nick. Peace out.